A very good evening to you traders. It's Mark here from the day trading room. Time is 7:45 in the evening London time on Monday 11th of July. Hope you all had a great weekend. The video is a little bit late up today. For some reason the server was down on my blog, so yeah, I'm just doing this now a little bit later than usual. A few of you have said that the website was down, so I don't know why, but it seems to be up now, so that's okay. I want to talk about the reprice trade on the non-farm payrolls. That was a great end to a great week. It's a fantastic setup. It's the reprice trade, as I call it, and now we can't use the tick index obviously overnight because the stocks aren't open, so we've got to use pure tape reading, pure price action. That's how we're going to play it. So what actually happened? Well, we had the non-farm payrolls number came out. Now I think somebody had it a little bit early because a few seconds before the scheduled time we got a little bit of a push down, push back up, and then the real number came out and we were off. Much lower than expected. I can't remember what the number was, to be honest with you. Just looking at price action. Don't waste time looking at the number. Just watch to see how the market's reacted. Markets can react in funny ways. So all you're interested in is reaction. Now, obviously, this is a bearish reaction. Now, I'm using a 55 tick chart here. Now, I don't use that to trade from. I use a 1 minute and a 5 minute, looking at the daily and the 60 for longer term stuff. But I'm just using this to display for information, well, for easier to view purposes on the blog. Obviously, I use the tape, anything shorter than 1 minute, to gauge my entries and exits, the dome, the time and sales. I'm looking at the pulses up and down, the orders coming in, and on just general stuff. But unless I've recorded it, I can't show that on the video. So what I'm going to use is a 55 tick chart. I've just picked that as a number. Could use anything 50, 90, 100 tick, whatever, whatever works, just to show those sub 1 minute price movements. So how do I trade the reprice? Well, the reprice, two stages to it. Number one is the first very short term pullback. Number two is the deeper pullback, and the third one, if you like that sort of trade, is the longer term pullback. So really, three trades, all in the direction of the move, but all trading a pullback of some sort. Now, the first is a very shallow pullback, so the drive, very shallow pullback in. Second is a slightly longer pullback and in, and third is a deeper cycle, and then that may take a while. So that's the way you should set you can set yourself up as you like, but that's the way I set myself up when I see this action, which is a reprice. Now, reprice to me is a surprise move that changes the valuation of an instrument. Now, in the case of the Dow or the equity indices, it's a general revaluation based on some data. Now, if it's a stock or if it's a commodity, it's based on the stock. Might be some news that's come out on the stock. Maybe there's a bid come out for the stock. Someone's buying or making a bid for that stock, or they've pulled the bid. In case of a commodity like oil, perhaps, or a commodity like corn, perhaps the harvest is different to what people expect. So reprice, basically something that is unexpected and changes the fundamental valuation or the perceived fundamental valuation at that moment in time of whatever you're trading. So, right, good drive lower. Now, you're looking for a first pullback to get short. Now, on the 1 minute, for me, there was a little bit of a pullback here, but that was really, really quick. This is ticks, don't forget, and it was really quick, and it wasn't enough, and I wasn't going to chase. So the first pullback for me really is this pullback on the 1 minute. It's a couple of minutes long. It's about 1.5 minutes long. Perfect. We've put in a bottom here. We've started to pull back up, and this is actually this pattern on the 1 minute. This pattern on the 1 minute. So we're starting to push. We're starting to pull back up, and you just want to see it stalling. That's what you're looking for. That stalling. You're looking for it to push up and run into a brick wall, which is what we get here. We get a push up, and this is too quick. This is too quick. We're looking for this here, some persistence pushing that can't break through that level. That is a solid level. See that on the tape as pushing, 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 can't get through, trying to break. There's the short entry looking for a new low. That's what you're looking for. You're looking for a new low immediately. Has to work quickly. Quick. I'm in on it. Very quick scalp out, scaling out into the pulse. If there's any sign of a bottom, out, because you don't want to get caught out in it. You want to make sure if that trade works for you that it's a profitable trade. No just holding on, hoping. Impulse, bang, taking the trade out, making sure it's profitable. 3/4, whatever, half, stop to break even, however you want to play it, making sure it's profitable, because there is likely to be a more of a counter trend move coming at some point. So in, out, looking for that first impulse that people have missed that little boat and just looking to shove it down. So that's what it looked like on a 1 minute. Very short term, bang. We put in a low. We took out the low. Should be scaling into that low. Great little trade. Nice start to the day. So the second trade, number 2. That's the first trade, number 1. Second trade, number 2, is a slightly deeper pullback. I'm going to have to get rid of the screen draw on this and scroll this along. Which, come on. Okay, there we go. Now, the deeper pullback on the 1 minute, let me get my drawing pen out, is this. This is the deeper pullback here. Taking 5 or 6 minutes to counter trend, finding it struggling to push any higher, and then rolling over. Now this was a slightly different to perfect. Now no trade is ever very rarely perfect, because it loitered around here for a bit before finally rolling over. Now on a tick chart, how did that look? Well, actually we got a nice little setup, because it pushed back to a level that we'd found as resistance before. So counter trend move, pushes up, looking at a level. Why are you looking at the level? Because you know from previously that was the level you initiated the short in the first place. So do you want to see if that seller is still there, or the group of sellers still there? Do sellers perceive that as a good place to initiate shorts? So counter trend move over several minutes. It struggles. This is good because we get a push up, smack down straight away, a second attempt. Now on that second attempt, that's really giving you the clue that you need. Your risk is quantified. You can take the short. You can see on the tape that it's looking weak. What are you expecting from that? Well, on number 2, as a number set up number 2, you're expecting at least a new low, and this is the one where you can and start to perhaps look for a longer move, because the initial short is impulse and it can snap back pretty quickly, as we saw. So you want to make sure that's a profitable trade no matter what, if you get that right. Second trade is one where you can start to look for extended targets. So this was a little bit difficult because it did loiter around before rolling over, but as it's retesting lows, you want to make sure you take them off the table and you're scaling into spikes. Okay, and now if you want to be positioned on the short side for a longer term move, this is the trade to do it. Number 3 is even more perfect, but this is the trade to do it if perhaps you want to hold and you've got a bit of a bearish view on the day. So moving on quickly, that's the short trade, number 2. Number 1 is the impulse. Number 2, the longer term pullback. I say longer term, 4 or 5 minutes, coming up to resistance, struggling. I know you might find sometimes you get a little spike up. What you want to do is you want to see what happens to that spike up. Don't stand in front of it. Just see the confirmation that there is sellers there. There are sellers there, should I say. So if you get the spike up and it gets sold immediately, where's your short? There. Where's your risk? There. You know, risk is quantified. That's what you're looking for. Okay, don't stand in front of it. Wait till it shows evidence that there are sellers there. So that's the number 2 trade. That's great. Number 3 trade is longer term. Now this time we actually started to come into the open. Let me move it along. In fact, let's ditch the tick chart now and just go straight into the 1 minute. So we came into the open and we pushed up slowly. We pushed up slowly, but where did we push up to? Right back to the level of interest we had earlier. We initiated a short there. We initiated a short there. We're ready to initiate a short at the same point, but we just want to make sure that the sellers are still there. Now it's been a little bit choppy at the open. There was the open 230, chopped, and they just sucked in a few buys there. Now we may want to wait just a little bit longer on this one, and this is what I do, or what I did as well on this. I wanted to wait a little bit longer. That became more of the resistance level. I want to see what happens as it approaches that. Do the sellers sell it straight away? Yes, they do. Let's just wait and see. And for me, this is more likely that the candle that this is correct. Now you can afford to maybe scale at half the position there if it doesn't work for you, another half there if the stop's a little bit too wide. But again, your risk is quantified. We had a bit of support here, so I scaled off some as we pushed down into that, and then starting to push to lows. I'm looking for a much further deeper push. In fact, let's move this out and get onto the 1 minute. We're now right at the lows, by the way, today. I'm not positioned on the short side on this. It's been a bit of a choppy old day. But I'm looking to see if it does generate any interest down here either way. But let's scroll over. I think we've got time. And this is something that you've seen me do before. You've seen it's quite a favourite of mine, using the ticks to judge your exit. Now, 1,000 ticks is, or lowest tick reading of the day, is a good place to take some off the table, because by the nature of ticks, they're exhaustion, they're the last flush, the last panic, the last ditched effort. Yes, you can get another subsequent drive, but likelihood is it's going to be a short-term spring. So it makes sense to do some scaling at that point in time. It makes sense to be proactive and take some off the table. So about the 20 past level, yeah. We broke lower. I'll bring the 1 minute back in, so the overnight back in again, so we can see the context. So run through the trade. Getting lost here. I'm getting caught up looking at other things. Apologies. Looking at the market. Yeah, trade number 3 is the deeper trend. Now this was at the open, pushed up back to our level, good level. This time we're waiting a little bit more for the confirmation. There's the short, scaling out into any support, and then final exit. Well, for me, final exit is lowest ticks of the day. Anyone who was looking for a longer term movement perhaps would have stuck with that and looked for more. But lowest ticks of the day up to that point was, for me, a good place to exit. So those are non-farm payroll trades. Just one group of trades, if you like. 3 trades, but the same premise, just different time frames. Really short to pullback, a little couple of minute pullback, and then the deeper pullback. And then if you want to go one step further, you can trade the larger cycle pullback, which on the 5 minute is this here. First overbought condition up to about a VWAP. This or this. Didn't quite overbought, so I wouldn't have taken that. I may have taken that if it wasn't Friday and I hadn't had some great trades pre-market. But you see, you want to keep yourself aligned with the sentiment, and especially when you're on a reprice like that. If you're going to start to position yourself long, wait for some strength to be shown, and then look for perhaps a setup based on that. But for me, reprice, 3 trades and 3 setups. If you can take all 3, great. If you don't, you know that if you miss the first or the second, you're going to have opportunity. So those are non-farm payrolls today. Very quickly, I'll run through it. I know it's getting on. Literally pre-market, we push lower, and it was a choppy day, to be honest. Pre-market was more action. We pushed, we opened. Now we filled the gap, which was a good little setup, because it pushed up and then just started to roll over. Almost filled that range, and ticks again, showing me what's going on. They couldn't poke up, and buyers were just overwhelmed by sellers at that point, which is what you're looking for. You're looking for that supply-demand balance to shift and for it to roll back over. So pretty nondescript day. I'm just sitting here waiting. I think the trades of the day were fading levels. Funny old tape earlier on. We were seeing 400s coming on. I don't know if you saw that. 400s, 200s. A lot of odd orders on the tape. So don't know what that was all about. But just we'll see what happens in the last hour of trading. If there are no opportunities, then we'll wait for tomorrow. So good trading, guys. As always, number one thing is manage your risk. You've got a trade idea. First thing you should be thinking, where's the risk? If the risk is too much, reduce the size. If you can't do that, don't take the trade. Simple as that. Good trading, guys. I hope it's been of some use. Waffled on a little bit about the trade, but that's just the trade I took. Like the setup. And so, I'll continue to take the trade. Good trading. Back with another video later in the week.